Good afternoon. We're here at Super Return Asia in Hong Kong, and I have the pleasure of talking with Han Seng from UOB Investment Asia. Han Seng, good afternoon.
Good afternoon to you.
Now, Han Seng, you're a fund of funds helping investors get access to a pan-Asian range of opportunities. Tell me first about your investors. Is it primarily Asian, primarily outside Asia, a bit of both? What sort of investors are you helping?
Our current investor profile is largely investors who are outside Asia, who want us to give them build a portfolio that gives them a good exposure to the growth opportunities in Asia.
Okay.
We have less Asian investors because I think Asian investors tend to want to invest in Asia themselves.
Right.
But I think increasingly we feel that given our experience and expertise in the region, we are coming up with products that could potentially also serve the needs of the Asian investors by targeting a space that we feel that more focused, where it's a smaller opportunity set and maybe it's a little harder for them to do themselves.
Right. Now, Han Seng, Asia, as you were saying a few moments ago before the interview, has always been very cyclical.
Yes.
And it seems like we're in sort of a period when there is long-term interest in Asia, but kind of money's being withdrawn rather than more money coming in. How do you see the current environment?
I think if one takes the view that Asian markets are cyclical and one takes the view that Asian markets are on a structural upturn, then I think we are entering a very attractive vintage. And just to validate a little bit, we got one of our colleagues to run a chart showing the performance of the stock markets versus the IRR performance of different vintages in Asia. And there's a fairly good correlation that when markets are pretty lousy, that's a good time to be investing.
Right.
So we think that if you hold the view that Asian markets are cyclical and you continue to like long-term trend, then now is a good time to be investing in private equity. And the last shoe to drop tends to be on the currency side, which is what we're seeing anyway.
Right, okay.
And anyway, I think the key thing is that private equity is relatively inefficient as a class. If you invest today, then you actually want the market to be good 3 to 4 years down the road and not today.
Absolutely, yes.
And we feel
very
that timing-wise, it makes a lot of sense.
Yes. So, opportunities, are there particular areas where you think there are attractive opportunities now, be that geographic, be that types of funds?
Yes. I think from a geographic point of view, we like places where there is change and there are inefficiencies. Because change creates a change in environment, people don't understand pricing and there are no precedents, so there's an ability to get good pricing. And for that, I think we quite like China, given what's happening in the restructuring of the economy that needs to go forward as they move now from version 2.0 to version 3.0. Japan could be very interesting. I think if we hold the view that the yen will continue to weaken, that will have a profound change on the way things are developing, and we also see that things may be getting better in Japan by the evidence of the increasing Japanese presence outside of Japan.
Right. Yes.
So I think those two areas we think are places of immediate interest, but we're keeping a very close eye on India and Australia, both large economies, both undergoing a little bit of a structural adjustment. With the Australian, the two-speed economy may be coming together. In India, it's not entirely clear what the outcome is going to be. Right. But the opportunities are there. It's just a question of letting valuations get to the level that makes it interesting for us.
And are you seeing that? Are you seeing valuations come down, become more attractive?
It is, but it's quite slow. I think one of the things that we had not quite anticipated is the low interest. It's a very strange situation in Asia today, where typically when economies are slow, we see prices of things get cheap.
Yes.
In this situation, we found that prices have taken quite a long time to adjust. So it's a unique environment for us, and we think that it could be due to the very low interest rate environment.
And that's not just an Asian phenomenon. I think we've seen that globally. I think it's fair to say that the adjustment in prices for assets has not been as rapid or as significant as people anticipated. Now, we talk about Asia, but you've mentioned 4 markets that are all unique and different. You've talked about China, you've talked about Japan, Australia and India, all very different. And then we have the frontier markets as well. So it's an incredibly diverse environment you're looking at.
So I think one of the things that we have realized is that the opportunity set in Asia has evolved a little bit from say 06 and 07. I think now the growth is not so strong. I think we've seen this, unfettered growth in China and India, and there's great opportunities. Cool. Now growths are going to be stabilized a little bit more, and you just can't make private equity returns by betting on growth alone. You need to be understanding more specific opportunities, something just beyond betting on economic growth. And for that, you need to look one level down and really pick your bets, so to speak. I think there's growth in Asia, but growth is not enough, and you need to pick your bets, be sensitive on valuations, be sensitive on the different opportunity sets that are coming out in different economies, and we feel that that's the adjustment you need to make in order to profit going forward.
Interesting. Now, Han Seng, at heart, you're a fund of funds manager, so in fact, you're not picking individual assets to invest in, you're picking individual managers to back the fund. Now, I was sitting in the panel you were on earlier, the one about alignment of interests. Great panel, very interesting. Tell us how UOB tries to ensure that the interests of your fund and therefore the LPs in your fund are well aligned with those of the managers that you select. What sorts of things do you look for? How do you get that alignment work?
I think the key thing for us when we talk about alignment is to get the managers to think along the lines of them being principals as opposed to being intermediaries.
Right.
And along those lines, we think of three main areas that we focus on a lot. Number one is the whole idea of fees and the level of fees and what's being charged to the fund, to ensure that I think the bulk of the returns for the managers come from the carry interest and the performance of the individual investments, and not just from managing the assets on a day-to-day basis.
Right.
And the returns come from the carry interest as well as the capital that they've put in. So the fees are not so rich that the journey is more interesting to them than the destination, right? The second thing is, I think, for the payment of the performance fees, I think we want it to be aligned that they get paid performance fee when we get a return.
Right.
First of all, capital, and then our preferred, and then it comes after. So the timing in which
so the waterfall has
to be, and simplistically speaking, we have a preference for fund level carry as opposed to deal by deal carry. And the third element is really to create an environment whereby there is symmetry between profit and loss. When we lose, they've got to lose too.
Right.
So to that extent, we like to have a very significant GP commitment.
I was going to say high GP commitment. Otherwise, you don't get that.
Otherwise, you don't get that. And actually, high GP commitment is key. It's amazing how people's actions can be shaped when they have real money to risk.
Now, the general level of GP commitments used to be sort of 1% of the fund. It's gone up a lot. It's now, 2, 3, 4, 5% is normal. What are you seeing in Asia? Is it similar?
Unfortunately, 5% is a real rarity.
A rarity, right.
I think we're still seeing somewhere between 1 to 2%, which we feel is really low.
Okay.
It's really low, especially when for big funds.
So that's an important thing for you to look at. How much skin does the GP really have in the game?
More skin is more useful. Sometimes when there's skin in the game, we can be a little bit more flexibility if it's an emerging opportunity set, or it's a manager where the track record is still a little bit early. I think the alignment thing is quite useful for us.
Right. Han Seng, thank you very much indeed. It's been a pleasure talking. Thank you.
Appreciate it. Thank you very much.
Thank you.
Bye-bye.
Thank you.